Hello and welcome to this week's episode for the Stock Market Update. I am your host. My name is Ken. Today's date is October 28th, 2017. Sorry I missed last week's episode. I was traveling for business. And let's see here. So here's the Stock Market Update brought to you by Conservative ETF Investor. Here we are at the home page. And once I'm done with this video, I'll upload the link right here, so that you can click right here to jump on it. And here is our current positions. Just adjust that microphone a little bit. So what we got going on is we're still on a hold posture for all of our positions. Our portfolio is doing pretty well. Let me show you how well the portfolio is doing. So since our buy recommendations were up 12.26%, not including dividends, and then if you want to see our dividends, you can see down here that the total of all dividends is 2.09% thus far. So you would add that on top of the 12.26. For calendar year 2017, the portfolio was up 8.33%, and not including dividends. Okay, so there we go with how the portfolio is doing. You can learn more about the portfolio here on the home page, our portfolio ideas tab. We'll go over about the portfolio percentages and the yields that each position is faring and so forth. Okay, let's jump right into our charts. First chart we're going to look at is the S&P 500. We use the stockcharts.com charting service for our chart purposes, and we use weekly candlesticks. This is a weekly candlestick chart. You'll notice we have weekly right there. Each one of these is a candle. Each one of these bars is called a candlestick, and it represents 1 week of action. This one is clear, so it opened here at the bottom and closed here at the top. A red bar would be where it closed. It opened at the top of the body of the candle, and it closed at the bottom. Okay, so anyways, you can see that on our chart here, well, the S&P 500 had a gain of 0.23% for the week. We're trading in this upward trading wedge pattern, and we're smack dab in the middle of that, and it's been unbelievably strong, the S&P 500. Here you can see that we use two signal indicators, the MACD at default settings and slow stochastics is here at default settings. Now, the MACD is above its signal line and rising, bullish, and you can see that the distance between the signal line and the indicator is getting further apart, which is bullish. This is all bullish activity. Here on the slow stochastics, you can see that we're above 80 and kind of running parallel to its signal line, all bullish activity. So bullish, and again, as I mentioned at the beginning of this broadcast, we are on, let's go back to our current recommendations. Our current posture is we are recommending a hold posture on all of our positions. So that's where we stand right now with all of our positions. So I'm just going through the charts just to show you what I am looking at in order to come up with that posture. Okay, so that's SPY. The next one we're going to look at is VEU. VEU is the Vanguard All World excluding United States ETF traded on the New York Stock Exchange. Had a negative week. It lost 0.15% for the week. You can see that we've been trading in this wedge pattern for quite some time, and we are riding on this support line. You can see on this most recent week how it just bounced, came down, touched that bottom support line, bounced off of it, and came up. That could be a hammer bottom candlestick where it's just going to continue to rise up, but we're going to, wait and see what we've got there. For our momentum indicators on the MACD, you can see that we're just kind of running parallel with our signal line, and on the slow stochastics, we're above 80 and just kind of running parallel as well. The next chart is VNQ. VNQ had a terrible week. Now, let's see here. This is the Vanguard Real Estate Investment Trust, ETF, traded on the New York Stock Exchange, had a negative week, losing 1.64% for the week. Here in the thumbnail, you can see how terrible of a week that's been. So the previous week was poor. This week was poor. This tail could be important. Here you can see that we have this rising support line, and we penetrated that, and we broke through it and closed pretty much just below it. But this could come back into that and bring us back up into that trading range. So we're going to wait and watch that. On our momentum indicators, we have the the MACD here on top. It's been kind of bouncing around, but currently it's below its signal line and pointing down away from it. But it's been doing this back and forth thing for quite some time, actually for almost all of 2017, this back and forth thing. Slow stochastics below 80, below its signal line. That's not exactly bullish activity either, but it has been poor activity for the past 2 weeks. So the expectation is now to see a bounce and for it to come back up and potentially retest this. If that does not happen and we continue further declines, we expect some support here at this line here. If that line breaks, then that is where this market is completely, the posture of this market is just completely ugly. But currently we have two moving averages. There's a blue 17-week and a red 34-week exponential moving average. You can see here in the thumbnail that the blue is above the red. So it's still overall in a bullish posture. Okay, so that's it for VNQ. Now we go to OSTIX. And this is the income portion. You can see the nice, beautiful yield of 4.62%, and its dividend structure right there, how often it pays off, and so forth. And you can see this since the buy recommendation back here, it's just been fabulous. Look at that, just beautiful coming up. Actually, my buy recommendation on OSTIX is not this line. That would have been the perfect entry point, right when the MACD and the slow stochastics bottomed and everything. Going back over to my chart, looking at OSTIX, I actually just bought that. That's a buy on 9/8/17 with a price on transaction of $11.44. The current closing price is $11.42, so it's actually still negative of 0.17% from my buy transaction point. But there was a dividend that we've captured in this position. That dividend paid 1.13%. So we're positive, even though we're negative on our share price, because of the dividend, we're positive on the complete transaction of 0.95%. So just under 1% thus far. So, okay, so that is that. And again, hold recommendations on everything. Two more charts for you to look at real quick. And the first one I'm going to show you is the VIX. What the VIX is a volatility indicator. So here you see VIX, volatility index, and basically it's an inverse indicator. Let me move this out of the way. Let's see where we want to put that. Maybe we can put that over here. Now what's happening here is that when the VIX goes down, I've got the S&P 500 down here in a chart. The S&P 500 goes up, and when the VIX goes up, that's when the S&P 500 either travels sideways or goes down. So we're starting to see the volatility pick up, although and the chart pattern now has changed. Now we look at the volatility indicator on a 1-year chart with daily candlesticks. So now we're looking at daily candlesticks based over the last 12 months. So the last trading day came down tremendously. That's because it was so strong for the equity market. The equity market had a tremendously strong day on Friday. Let's show you that real quick. Let's just go over to the S&P 500 on a daily. So here you can see in the thumbnail on the last trading day how we've just jumped up to make, I'm not sure if that made an all-time new high or not, but that sure looks like it was an all-time new high. And it was just a tremendously strong up day, 0.82%. You can see the tail there, so there's a huge trading activity on that day. But so that's why that volatility indicator, go back to the VIX, that's why you're seeing that red body right there, because the equity market was so strong that day. All right, so anyways, I use a couple of moving averages here. The blue is the 50 and the red is the 200. You can see the blue is below the red, so the slow moving average is below the faster moving average is below the slow moving average, and the indicator is trading below both, indicating that that's going to take that faster moving average and pull it down away, further away, which is good for equities, because again, this is inverse. As this goes down, it goes up for equities. The only issue is that we're trading at near low levels here. We're pretty close at 980 right now, and with a low point of being, I don't know, 9 something or another, 9.2. Well, when you're at these low levels, generally speaking, the only place to go is up, because you can't go any lower. When this goes up, SPY goes down, which is your S&P 500. One more indicator to look at, where are you, is, hang on, I'm having a hard time finding it. There it is, VXN. Okay, VXN is the volatility indicator for the NASDAQ 100. Here you can see that we're kind of taking the fast moving average and kind of bouncing around, but it's currently below its slower moving average. The 50 is below the 200. The indicator is below both. The MACD has topped and is traveling towards its signal line, and you can see here that the QQQ, I've got a chart of QQQ, the NASDAQ 100, hit a bottom and is now rising. So if this trend continues, you're going to see good things for the equity market. So that is pretty much it. Again, to reiterate, current posture, hold recommendations on everything. The market's at all-time highs, so it kind of makes you a little bit nervous. And that's it. I hope you've enjoyed today's episode. My name is Ken. Thank you for watching.